fallout from the Silicon Valley Bank collapse, the second biggest bank failure in U.S. history.
There are recent developments that concern a few banks that I'm monitoring very carefully.
Hey guys, it's Michael. Over the past few days, the United States banking system has been undergoing significant turmoil. First, Silicon Valley Bank failed, and another just today, Sunday, March 12th. We're going to talk about what happened with SVB, what we know about the New York Signature Bank, and how this could affect the markets. If any of this is new to you, here's a recap. Banks operate on something called fractional reserve banking, meaning they only have to hold a percentage of their customers' money. This all works as long as people are calm and believe that the system works. Where this can go wrong is when all the people try to pull their money out at once. Using fractional reserve banking, the banks can then lend out the rest of their money or invest it in generally safe treasuries. Except that SVB took a risky bet by investing in a US-backed treasury that gave them nearly 2% interest, pretty much betting that the Fed wouldn't raise interest rates super fast. The problem is, the Fed did raise interest rates super fast. While the Fed was moving aggressively and trying to cool inflation, there was almost a hold put on Wall Street. This caused a problem because Silicon Valley Bank relied heavily on tech. Many of the people who had money in SVB were tech investors, tech companies, and venture capital firms. Some big names like Circle, Roku, and Etsy were among the companies that held hundreds of millions of dollars at SVB. On Wednesday, March 8th, SVB announced it sold a lot of securities at a loss and that it would sell more to work its balance sheet. This, of course, caused massive panic, and VCs began to tell their companies to pull the money from the bank. This created even more panic, and SVB's stock began to plummet, dropping more than 60%. By Friday morning, SVB's stock was halted and they were handed over to the California regulators. I know that was a lot to take in, so make sure to subscribe while you take a break. Next up is what happened with Signature Bank. Founded in 2001, Signature Bank was a New York-based commercial bank with 40 private client offices in a variety of states. Not only with normal banking, but Signature served clients in the crypto world and recently had been trying to take less risk. Signature began to suffer from a deposit outflow after what happened with FTX. From Yahoo Finance, deposits dropped 17% in the fourth quarter of 2022 as compared to the year earlier. The value of Signature's securities also dropped due to higher and higher interest rates from the Fed. Last week, Signature Bank tried to gain the confidence of its investors, but still ended up losing it according to Yahoo Finance, and they lost more than 20% on Friday and were down over 76% in the past year. Without going too far in depth, Signature was also tied in with cryptocurrency, which has been having a really bad run recently. Signature Bank was seized on Sunday, March 12th, 2023. As for the market, well, to me a lot still feels unknown, but stocks tumbled on Friday due to the underlying threat of a repeat of 2008. The S&P 500 dropped 1.4% last week, and this is its worst week since September. Investors are worried about how this could trigger the Fed to raise rates even more because inflation is still high. According to The Fortune, regional banks had the largest losses. First Republic Bank tumbled 14.8%, and Charles Schwab lost 11.7% on Friday after losing 12.8% on Thursday. To close, JP Morgan Chase was up 2.4% on Friday. I know this was a short video, but I wanted to get in as much info as I could and not take your valuable time. Please consider subscribing and watch some of my other videos that relate to personal finance.